Making money in the markets is uh, a lot about being able to adapt to changing conditions. So we've got a great example here with gold. Um, at the bottom here of the bear market in late 2015, people had just, um, we'd had 4 years of disappointment, of generally prices moving lower. And so nobody was prepared for the gold market uh, behavior to change. And, and that's what drove this baby bull rally. Um, People had become conditioned to take profits quickly, to expect rallies to fail to make new highs. And so almost no one uh, was able to ride this baby bull move. And then uh, right about the time everybody became convinced the bear market was over and that gold was going higher, we get this uh, nasty collapse uh, after the elections, and gold um, gets knocked into this long, frustrating basing phase as the stock market takes off, driven by the economic policies put into place by the Trump administration. And for the first 2 years, um, we had a Republican Congress, so things were actually getting done. And the stock market saw that, and the stock market took off, and gold just languished into this difficult sideways basing pattern. And that convinced traders that, again, gold was, just a disappointing asset. It was never going to go anywhere. Rallies were never going to break out above this 1370 resistance zone. And so, as I've been warning people for months, this cup and handle basing pattern was a different type of basing pattern than anything we'd seen. And it was the potential setup to finally break out above this. Turns out this is correct, and we did get a breakout, but I'm seeing the vast majority of people are still locked into the trading mindset that was developed during this difficult basing pattern. And by that I mean they've been trying to pick tops all the way up in this rally. They're doing it again, and so they've developed uh, strategies that worked during this period, and they're still trying to implement those strategies during a phase where the gold market has changed. Instead of adapting and recognizing that the market has changed and adapting their trading strategies to take advantage of the change, they continue using the strategies that worked here, and they are not working during this breakout phase. Same thing that happened here. The strategies that worked during the bear market were not going to work during the baby bull phase. Like I said, I've been seeing people trying to call a top, all the way up in this very explosive rally, and I'm seeing it again here today, or the last couple of days, people calling it for a top in gold, and a corrective move back to, either the baby bull top, 1350. Many people, of course, are even predicting that we're going to come back down to 1250. Like I said, again, they're locked into this mentality. It took 3 years to develop this mentality, and traders just are not going to let go of this easy. Um, this is what bull markets do. They kick people off before the next big move. So anybody that has missed this rally is waiting for an entry. The most obvious entry is a retest of this support here around 1377. So I have to ask myself, what are the odds that the market is going to hand people that entry? And it seems to me that it may be slim, that the gold is going to make it that easy for people to get back on board this bull market. So let me move over to silver. Um, this is what makes me think that gold may not be putting in a daily cycle top like so many people are predicting right now. Silver, this doesn't necessarily look like a top to me. This looks like a bull flag developing, and if silver is forming a bull flag and uh, potentially ready to uh, rally higher out of this bull flag, then I would have to think gold is going to do the same thing. And so I suspect the metals are probably setting up to catch a lot of people off guard, a lot of people trying to call tops, sold their positions, hedging their positions, and they're probably being set up to miss another leg up in the gold market. So in my last video, I warned that we were going to have a bounce off the 200-week moving average. Um, you would expect some kind of bounce anyway, just naturally. But I also think the ECB is using that support. They failed to hold the dollar at the 200-day moving average, but I suspect they would try again to turn the currencies back around at the 200-week moving average. So, maybe this is probably a combination of shorts taking profits at the 200-week moving average, but I also think the ECB is trying to turn the currencies back around. They would like to keep the euro suppressed against the dollar, but there's just no natural buying pressure in the dollar at this point. The daily cycle is only 12 days old, and no natural cycle is going to bottom on day 12. Sentiment is not extreme yet. So, we're just not getting any follow through here. Like I said, there's just no natural buying pressure. So, potentially, the ECB is going to fail to turn the currencies back around right here. And if this just turns into a little bear flag in the dollar, then at some point it's going to break down and continue lower. And that would drive another leg up in the metals that I think very many people are not anticipating right now. And then finally, I think the same thing is setting up to happen in the stock market. We've been in this difficult sideways consolidation, after the huge strong trending move after the elections. We've fallen into this year and a half sideways basing pattern. It's conditioned everybody to develop strategies that work during this kind of a pattern, very similar to the basing pattern in gold. Many people calling for the top of the bull market. So again, I think the same thing is going to happen. Everybody is going to get stuck in a sideways mentality, or what they believe is a top in anticipation of a bear market, and they're not going to be able to adapt and convert to strategies that work during a breakout phase, which I think is coming in the stock market in the months ahead, very similar to the breakout that occurred here right after the elections. Nobody was prepared for this big trending move after the elections. And I think same thing's going to happen when we get our breakout in the stock market. Everybody that was in the camp that this was a top and a bear market was starting, or had just developed strategies that worked during this sideways phase, they're not going to be able to adapt and trade the breakout phase as we make the next leg up in the bull market.